Hi guys, welcome to my channel. My name's Sam. The reason I've created this channel is just to show a few interesting finds I've come across whilst trading binary options. I trade binary options and Forex for a living now, and basically I wanted to share some of the things that have taken me a good while to learn through trial and error. Hopefully pass on some of this information to maybe newer traders so that they can skip some of the time that it's taken me to learn these things, have a shortcut maybe so they can be profitable a lot sooner. First of all, I'm going to show you a quick method that's quite effective. It's around the 70% mark usually. Obviously the market has phases where these things tend not to work, maybe for a day, so I tend to suggest that people use money management with these things, because all strategies have their bad days. No matter how good their good days are, they'll have bad days, and I offer a few really good, clever money management ideas that I'll include in some upcoming videos. But today I'm going to show about Fibonacci retracements. And it might sound confusing at first if you're new to this, but it's pretty simple once you get to know the tools and the indicators. First up, I'm using MetaTrader 4 for this. I recommend you download it as well. It's very flexible in terms of indicators available and customization. And this indicator I've got on the chart here, you'll see connecting highs and lows. This is the zigzag indicator. Basically it plots a point at lows and highs of various legs of movement and plots a line in between them, creating this zigzag effect. And that's just to make these legs stand out so we can immediately glance at the chart and know where they were. The other tool we're going to be using is up here, Fibonacci retracement tool. Now you can use this one, the Fibonacci expansion, but you don't need to. I'm going to tell you why. First of all, we'll click on it, plot it anywhere, double click on it to select it, and then right click and Fibo properties. Now this box will pop up, and I suggest you have all these, I suggest you pause the video and plot all these points on your in these levels and description, plot all the ones I have. So first of all, you're going to want a 0 here and a 0 here. This is your 0 line here. Then you're going to want a 0.382 and a 3.38.2 here. Then mine's a bit jumbled up. You're going to want a 1.618 here and a 161. This should be 8 here. 161.8 there. I don't know if I skipped the 1 and the 100. You're going to want the 0.618 and the 618. You're going to want the 1.272 and the 127.2. You're going to want the 0.786 and the 78.6. The 0.886 and the 88.6. I've plotted 2 of these, so I'll remove one. And the 0.5, which is the 50. Now you don't have to understand what these are quite yet. If you want to understand more about Fibonacci levels, just Google it. It's pretty simple. Just at this point, make sure that your charts are your Fibonacci levels are the same as mine here. And once that's the case, we're going to want to make sure we're on 5-minute charts. I've got selected here the pound against the dollar and the 5-minute charts. And you're going to want to look back to this dotted line is the open of the day, the session open. So this opened last night, and these are the 5-minute candles that have occurred since. Now I like to choose the low of the day. Obviously it's not the low right now because price has broken the low, but for demonstrational purposes this would be the leg we choose as our anchor leg. Now most Fibonacci tutorials will tell you you're going to swing low to swing high. You take the retracement, wait for it to come down. 61.8 is the golden level apparently, and wait for price to hit it and come up. And that's another strategy in itself, trading 61.8s. The strategy we're going to look at today is slightly different. We're going to reverse how we draw our Fibonacci lines to get the extension. The extension calculates this leg and then calculates future points that the price will retrace at. So this level here is 100% of the move. You'll see here 0, and you see at the top of the move 100. Basically what we're going to do, we're going to wait for price to break the 100, and we're going to trade the first touch of the 127.2 and the 161.8. And for that we're going to take a 5-minute trade in the opposite direction. So if price is coming up and hits the 127, we're going to take a put for 5 minutes. And I'll go through today's history, and I'll calculate what our wins and losses would have been for today. So basing on when we entered the market, which would have been around 9 o'clock here, this is what we'd have seen up to about here. We'd have drawn our leg here, and we'd have waited for the 127 to be hit. I'm going to plot a line. I'll make the line a different colour. Which would count as our winning trade. I'll zoom in a bit. So here's where price hits the 127, retraces. Again, we wait for it to hit the 161, which is here. A nice wick form on it. A 5-minute candle. Put. Once the 161 is broken, we move our Fibonacci tool up to the next leg. To the next leg, I mean it has to make a new high. So this is where it has to break, and on the leg it breaks, which would be this, making a new high, is where we draw our next Fibonacci. Move this up. And again, we have here, price hits the 127, 5-minute put. Price hits the 161 here, 5-minute put. Now we have trend reversal, and we know that because we keep our level here, we have the 100%, price comes down back into the 100%. So here we're going to delete our Fibonacci tool, and we're going to trade in the direction of the new trend now, or we'll be trading counter trend, but we'll be placing our Fibonacci's in the direction of the new trend. This is where we draw our leg. Here's our 127. And our 161 was an out of the money trade. This was because there was news around here. We don't trade on big news. This was big news here. I'll show you this by adding a news indicator to the chart. Just bear with me. If we see here, 26 minutes since USD preliminary consumer sentiment. So up leading up to news and just after news, market is so erratic and volatile we don't trade. So very likely we wouldn't have traded this. I'll go back and I'll take a random day from history. I'll just go back and stop. Switch to the hour charts to go back further. I'll switch to M5 and I'll take a day. Okay. Draw a Fibonacci retracement, as this is the lower level, and zoom in. Here we have our 127 being hit for the first time. Nice hyperextended candle. Here we have our 161 being broken. 5-minute candle. Trend changes, comes back below the 100. We switch round. This wasn't a very big leg though if you look at the candles, so we'd leave that. And that currency pair yielded 2 trades that day. Now I usually trade 3 currency pairs, and there's plenty of trades. But as you can see, there's 1, 2, 3, 4, 5, 6, 7 trades in the money, 1 out of the money, but we very likely wouldn't have traded it anyway. And with 7 trades in the money, with proper money management, you can make a lot of money from a very small investment there. So that was my first video, just to introduce you to an effective strategy, something that I've come across and that works on most days. Obviously there are unknown forces at work in the market often, so sometimes the rules are broken, but the good days on this strategy far outweigh the bad days. So it's a tool. Fibonacci extensions and retracements is something I recommend you getting into, especially with a broker with good payouts. You can really leverage trades, consecutive trades in a row with good money management. I've included a few trustworthy brokers with high payouts in the description box below this video. Look forward to your comments. Any questions, please get in touch. Thanks for watching.